Thanks for watching our self-service analytics video series, powered by Ask Analytically. Every organization aims at operating at or above the cost for employing their workforce. Margin can be viewed in a number of ways. One of those approaches entails regular analysis of labor expense compared to revenue. By combining an organization's point of sale data feed or top-line recognized revenue with payroll information, leaders are able to compare labor expense to the monies coming into the business. Here, I've pulled in the monthly recognized revenue, along with 3 measures that this organization compares to determine revenue and labor margin. Total compensation, which is all of the earnings that are paid to workers, including health benefits, employer contributions to retirement, and employer-paid taxes. And earnings, a subset of total compensation earnings that are specifically accounted for on a worker's paycheck, like overtime and regular wages, as well as employment benefits like cell phone reimbursement, and labor expense, an even skinnier set of earnings that are tied to the hours earned by an employee. Quickly, I'm going to change this table into a stacked column chart to visualize the monthly variances. From here, I'm picking out a specific month, March. I'm going to hone in on this specific month by actually changing the question that I have written above. Simply by adding in the month of March, I'm able to see the specifics for this month. By right-clicking, I can show all of this information in table form. Now, let's see how revenue and labor expense is broken down by worker, for example. I'll simply type that question into the bar here. From here, I can see the monthly amounts of revenue per worker as well as employer cost per worker. From here, again, I can switch this into a table to be able to view the specific amounts that are accounted for within each of the colored segments above. Leaders are responsible for the financial well-being of their organization and are beholden to finding additional margin month over month. In addition to that margin being used for indirect expenses like office space rent or internet connectivity, these funds also determine the amount that goes back to shareholders, employee owners, and to make improvements within the business. To grow your own organization, attention to these figures and taking corrective action based on influxes in cost or revenue is vital to your success.